There were more than $2.7 billion in social media scams between 2021 and 2023, and this trend shows no signs of slowing down. Now, a lot of these scams are the ones that, prey on the elderly, and for many of us, they're pretty obvious, right? If you see something that says, you've been selected to win a free gift card for $10,000, just click here to claim the prize in the next 5 minutes before it disappears forever. You can be pretty sure it's a scam, and the majority of you aren't going to fall for that. But what I want to focus on in today's video is protecting yourself against investing or maybe tax scams that are probably not Ponzi schemes to the extent that you're going to lose all of your money, but are the types of scams that are more likely to simply just overpromise and underdeliver and likely cause real financial harm to you, even if they aren't straight up frauds. I'm Stephen Neely, certified financial planner with Fortress Capital Advisors, and in today's video, I'm going to provide you with a framework that you can use to protect yourself from being taken advantage of. And I'm going to do that by showing you the top tactics used by online investment scammers by looking at several real examples from Facebook of ads that I've come across that I know are either just downright fraudulent or are pretty much just going to rip you off and not deliver anything close to the results that they claim. So as far as the framework, the first thing I would do is ask yourself the question, does this ad invite intrigue? Does it promote some burning desire, or does it force some type of decision through a limited offer? And look, anything that you're going to see online nowadays is going to have some element of this stuff. I have a YouTube channel. Everybody plays the game. Look at the thumbnails and the titles, and they're all kind of meant to invite intrigue in some way or another. But what I'm talking about here is probably going to be more obvious, and there are degrees of this. And if you notice that the ad has just layered this on, you can pretty much know right away you are the mark, and already that's a red flag. Now, number two, can you find evidence online that this is a real company? I'm going to show you evidence later on of an ad I came across on Instagram where I could find no evidence that this was a company anywhere at all. And if that's the case, you can pretty much eliminate it from consideration based on that alone, right? What does that tell you if you can't find any evidence that this is a real company? Now, I want to be very clear. Just because you can find evidence that it's a real company doesn't mean that it's a good offer. But, finding no evidence is a great way to just eliminate it altogether. Number three, and this is the most important one on our list, is this promising a free lunch? In other words, if it sounds too good to be true, it probably is. We all know this, and it's not even necessarily wrong. We all want to improve our lives, and we want to believe that there's some kind of hack out there that could just instantly improve our situation. But the truth is, there almost never is, and it's unfortunate, and I'm going to give you guys specific examples of what to look out for so you don't fall for these types of scams. Now, three of the broad ones are, is it offering a high guaranteed return? And what I mean by that is it offering something like 10, 12, 20% return on investment that's guaranteed. You almost certainly know that it's going to be a scam if that's the case. And one way to protect yourself is at any given time, you see an investment return and you go, okay, let's say they're offering 10%. What you should do is look up the current yield on the 10-year Treasury bond. And as of today's video, that's about 4.2% per year. If something is guaranteed and it's paying substantially higher than the government 10-year bond, that's sort of a long-term proxy of a risk-free type return. That's already a red flag. Now, some investments pay higher than that, but usually they're not guaranteed and they're not put out there as having no risk. And so, I put down there in my second bullet, if something offers double-digit return with little to no risk, right? Stock market returns without the downside. There are things called buffer ETFs, and those are real products, but it's more of a marketing gimmick, and there are huge trade-offs to these products that nobody's going to advertise up front. Another one that I see all the time, and we're going to spend the last part of the video going over, is promissory notes. most of these are going to end badly for people. And I want to help protect you because I've talked to some prospects who spent several $100,000 on these things, and I know they're going to get pretty much wiped out on those investments. Anything that's offering no income taxes. Look, there's plenty of ways to reduce taxes. There are different strategies that work out better for some people and others. These are real. Everybody in the financial services industry loves Roth conversions. But the truth is, they're not always the right answer. And there's nothing that allows you to pay no income taxes. There's some type of deception going on here, or there's some just massive trade-off that they're not really telling you about. So let's go to our first ad here. This one's relatively harmless, but I still think it's pretty funny. So you've got top 5 favorite stocks, and that's Warren Buffett, who, if you don't know, he's one of the most famous investors of all time, and he's got a really, really strong track record. And it says Warren Buffett's top 5 favorite stocks. Send me the free reports. And look, it's a common marketing tactic. As soon as you sign up for sending the free reports, you're going to be in their marketing funnel, and they're going to keep on sending you all of these offers. It's part of the game. We all do it. But I think this one is kind of funny because it's advertising Warren Buffett's top 5 favorite stocks. And the reality is you can look that up for free. Everybody has access to that information because his company, Berkshire Hathaway, is publicly traded, and you can find out what stocks he invests in at any given time. Just do a Google search for it. I would typically avoid these, but if you fall for something like this, it's probably not going to be the end of the world. There are way worse examples that we're going to go into here in a minute. So here's one that's a little bit slimier, and I'm sure there's going to be no actual value to what you get from this offer. Anytime something says the man who called, right away, you know this is just a marketing gimmick and there's no real substance to it. A great way to become the man who called something is to write a newsletter for years and make thousands of investment calls. Once that happens, you're always going to be able to look back and say something to the tune of, the man who called 4 of the best 6 performing stocks over the last 20 years reveals, right? Because you've made thousands of calls. Pretty good chance that you mention NVIDIA or something like that in your newsletter over the last 20 years. Here's where I say it gets a bit slimier. $1,000 in each could make you a millionaire in less than 6 years. Here's where the alarm bells should start going off. Promising a super high return for basically imagine taking, I guess they're saying $6,000 and turning that into $1 million in 6 years. The chances of doing that are extraordinarily low. The funny thing is, so I'm sure these guys are also, just like the previous ad, selling some type of market newsletter, and it's probably relatively harmless, but one thing that you should know is that most of those market newsletters provide next to no value. There was a guy, really like him, he used to be on Market Watch. I think he still writes columns sometimes. His name is Mark Holbert, and he provided a service where he researched hundreds of these newsletters for years and years and years, and what he found is that the vast majority of them failed to outperform their benchmarks, just like you see when you're talking about stock pickers for mutual funds. And so this is probably the same case. Best to just avoid it because you're probably not going to get anything of real value out of it. All right, here's the Instagram ad I mentioned earlier. So these guys are something called Digital Discover Pro. You can see it's digitaldiscoverpro.com. You look that up, there's literally nothing out there. I can't find any company that's called that. There's some type of digital discovery, but that's actually a different company. So right away, I would just eliminate this from my list of anything to consider. But beyond that, I love their tactics. Read the fine print there. It says, you see all the blue boxes. Right above it, it says related searches. So then they can claim, well, I didn't actually say guaranteed 12% return. All I said was, well, this is a related search, right? But the vast majority of people are just going to look, guaranteed 12% rate of return, 12% interest savings account. And they're going to get fooled into going down the rabbit hole with these guys, and they're going to have all of the best ways to manipulate you and close that sale. And this one, the fact that there is no web presence out there, I would be more wary of even talking to anybody because it probably is a scam, especially when you're talking about guaranteed 12% return. If you're willing to actually go that far and use those types of tactics to get leads, what does that tell you about this company? All right, here's where we start to get into the worst of them. So here's the inside of the Facebook ad, and here he's saying, so the median salary in the United States is $44,000, and my mom is leveraging a trading software that is automated. It's made thousands of trades in her account. She doesn't know how to trade. She is now over the median salary just from the profit from this trading account. Like, she's averaging right here 6.87% per month. Again, she's not a professional trader. She only deposited $60,000. So imagine what they're saying here. This is where they're promising some type of super high return, and it acts like it's a free lunch, right? She doesn't even know how to trade. Her trades are automated, and she's compounding 6.87% per month, not per year, per month. Let me give you guys a little lesson here, just so you know, anybody who's promising this type of return is certainly fraud. And these guys definitely are. It doesn't matter that it's just trading software. And then they're going to put, past performance is no guarantee. This is a super slimy tactic, and you shouldn't trust anybody who uses something like this. And let me kind of run through a situation with you so you understand what you're really up against if you think that you're going to trade and compound 6.87% per month. The most successful investor and hedge fund of all time is from Renaissance Technologies. They have a fund called Renaissance Medallion Fund. And I had a whole video on Jim Simons, the guy who was the founder of that company. If you're interested, you can check that out. But the reality is, the most successful investors of all time, and these guys are literal rocket scientists and mathematicians, those guys, before fees, compounded about 60% per year, which, by the way, is less than 6.87%. And the way they operate is, first of all, they don't allow in any new investors. Only their employees can invest in this fund. Second of all, they kick out your profit every year. So let's say you made $100,000 last year. Usually you'd want to just keep that in the fund and keep compounding it. I mean, that's the way you grow your wealth. These guys remove the earnings every single year. And so the reason that they do this is because once you're compounding 60% a year, and if you are continuously reinvesting your funds, you would eventually become the entire economy. It wouldn't take that many years to just dominate. Like, your fund would be bigger than global GDP, but you couldn't possibly scale something like that. And so just intuitively think about what would happen if you had some amazing trading secret that you wanted to sell to people through online Facebook ads, and you were able to compound 6.87% per month. Everybody and their mother would buy this strategy. And then eventually it wouldn't become profitable anymore because it wouldn't be scalable. Everybody would be making the same trade, and eventually nobody's going to want to sell into that profitable trade, right? Traders get smart. They realize, well, this isn't working. I'm the dumb money. Because remember, trading is a zero-sum game. For every winner, there's a loser who sold that. And so that could never happen. This is definitely a scam. And, you should read the Bloomberg article. There was some guy that, he was one of these gurus, and he had a trading school out there. And, he's under investigation and in the midst of all of these lawsuits because basically he built all of these suckers out of, their life savings because he promised them a system that was going to work kind of like this. And many of these people got scammed, and they're obviously not happy about it now. But nobody can compound that kind of money. And even if they could, they would never sell it on Facebook. Don't be a sucker. Here's the last one. And I've seen this a lot, and I've had prospective clients tell me they invested hundreds of thousands of dollars in this, which really freaked me out. But once somebody's done something like that, I mean, you can't even try to talk them out of it because they've, convinced themselves that they've done something that's right. But you see these guys advertise everywhere. I blurred out their name because I think they actually are a legitimate company, and I don't want them suing me. But what I think is going to happen is that this investment is going to go wrong, and then they're going to get sued, and the investors are going to get pennies back on the dollar. But, let's look at the ad and then we'll talk more about that. So these guys are saying, hey, 8 to 12% annual yield, equity-like returns, no equity-like volatility. Two things right there, right? Okay, they're promising a really high rate of return. Okay, we know that the 10-year treasury bond pays 4.2%, and these guys are offering 12%. Wow, that's a lot higher. Maybe it's a lot riskier, and that's okay, right? Like some 12% investments are risky, and that's fine, right? They offer 12% for a reason, and maybe you're okay with that risk. But look what these guys are saying. Equity-like returns, which means stock market returns, no equity-like volatility. So basically they're promising a free lunch here, right? I'm giving you stock market returns without the volatility. Well, how are they doing that? Because we know there is no free lunch. And so the way they're doing this is you're lending them money and they're giving you a promissory note. What they're then doing is they're taking those proceeds and they're investing in oil and gas projects. The trade-off is you're investing in something that's a bond instead of a stock that's traded on an exchange, so you don't have access to daily liquidity like you would with the stock. Maybe that's fine for you for a 12% return. But if you peel back the onion a little bit and you actually go in and read the private placement memorandum for these notes, what you're going to find is these are unsecured bonds. They are subordinate, which means they're junior or underneath other bonds that these guys also have outstanding. Not only that, but they say these bonds would rank junior to any secured indebtedness, including the indebtedness outstanding under our term loan and our letter of credit and other debt that we agree is expressly superior in rank. So what's going on here? Well, these guys have bank loans and other senior lenders, and those loans are secured. And what that means is that the projects these guys are investing in, these oil and gas projects, whatever those are the assets that back up this loan. So let's say in the event that something happens, like the next time we go into a downturn, the price of oil tanks and these projects are no longer profitable, which is quite likely, right? Oil and gas is a very speculative and very cyclical industry. So what's going to happen is the senior lenders are going to be able to go in and take over these projects, and they're going to be able to get paid back everything that these projects are worth up to what they loaned out. Then, if there's any money left over, all of the other unsecured lenders have to line up and fight it out for probably pennies on the dollar. But I can guarantee you that the vast majority of people who are investing in these promissory notes don't know anything about that. The funny thing is, when you Google this company, one of the search terms that comes up for them is, are X, Y, and Z companies' investments FDIC insured? No, they're not. They're unsecured notes. There's nothing about the FDIC that has anything to do with this. But that's how unsophisticated their investors are. And so I'm not here to make fun of these people, but the reality is you don't ever want to be in an investment with people like that. Because here's what's going to happen. You're going to get into a downturn. They're not going to be able to pay off their loans. And then they're going to get sued by hundreds of different lawyers. And this is going to be tied up in bankruptcy. And the lawyers are going to extract mass sums from whatever value is left from these projects, and you're going to get pennies on the dollar. If you want high rate of return investments, there are good ones out there. They have trade-offs. They might be worth it. I can pretty much promise you this one is not going to be one of them, and you should avoid promissory notes that give you an unsecured position in anything. You are almost certainly going to regret that at some point. You got to protect yourself. And how do I know that this is probably a scam? Because look, they're promising a free lunch. The kind of investments that have high returns with very real trade-offs, they don't have to promise a free lunch. So if I'm you, I would avoid something like this at all costs. So that's it. Always remember, if something sounds too good to be true, it probably is. Don't be a sucker. Hit the like button if you enjoyed this video. And if you want to get more videos like this, hit subscribe. I post videos on investing and retirement every week. Take care.